Guest David Willoughby, Vice President and Director of Construction Lending at Stockton Mortgage, discusses their success in the niche market of C2P lending for manufactured housing. David breaks down the advantages of C2P loans for builders, borrowers, and lenders. He also covers the importance of training and support for loan officers to make sure they are comfortable structuring these specialty loans.
New construction is going to be hot for a while. All indications are we're short in housing nationwide, and it's going to take years and years and years for that to correct itself. Every new loan brings a new challenge, and you would think there's only a handful of scenarios that you would run into in doing these type loans, and it's amazing how many different type scenarios a customer can come at you with. You need to be involved with the customer and with the builder from start to finish.
I'd like to welcome everybody to the Construction Lending Podcast. I'm your host, Sean Ferris with Land Grill, and today we have a very special guest. We have David Willoughby, who is the Vice President and Director of Construction Lending with Stockton Mortgage. David, welcome to the podcast.
Well, thank you for having me, Sean.
This is exciting. And today's podcast, what's really interesting about Stockton Mortgage, I'm getting a little brief 2 seconds of history here, is you guys have been very successful carving out a niche in C2P lending around manufactured housing. Is that correct?
It is, yes, sir.
And which really fascinates me. It's such a great niche. Great niche to have. Absolutely love it. Big fan of manufactured housing if you listen to this podcast. But what I'm really curious at and what we want to talk about is, why manufactured housing and what makes you guys successful in this?
Yeah. So why manufactured housing? So I've done manufactured housing my whole career, and I've been really fortunate enough to work for David Stockton at Stockton Mortgage. And for forever, we didn't have access to a construction, a perm program. We always did those loans as in-loan transactions, and had built up a pretty good book of business over the years doing that. Just in a casual conversation with David one day, we were talking about that book of business and some of the, risk layers that you have in doing that type of loan as an in-loan transaction. And we just said, wouldn't it be cool if we had a construction program that we could eliminate some of those risks? So from that conversation, we just started hammering away and building it. And, David, I think, had a meeting or had met your father and kind of introduced us to what you guys do with your program. And that's how the program started. It started from just a conversation and a chance meeting with Mr. Ferris and David, and from there we built our program.
Yeah, my father's great with that. Should have him on the podcast someday. Give the whole Ferris family backstory. But why C2P? Why C2P specifically for manufactured housing? Was it something you guys just really wanted to charge after, or did the desires to offer a construction lending program eventually evolve into more of a focus on manufactured housing?
Yeah, so it really goes to the history of doing that type of product, that type of house, and having that referral base built in. We started it with manufactured housing, so obviously that's kind of been our niche and our focus over the time. We have since opened it up to site built, and we're a lot more cautious with site built. There's a lot more moving parts with site built. And don't get me wrong, with systems built, there's risk there as well, and you have to really know that market to be able to offer that program. But for us, systems, we call it systems built, which is manufactured in modular housing that comes out of the factory. It's housing, but it's a different market of the housing. And we just knew that market. So we've kind of focused on what we know, and we've gone after those type of builders and dealers.
What was it like the first couple loans that you start to make, you're getting into this, what was that process like? Say the first handful of loans that you started to originate here.
No, it's continues to be a learning process. It seems like, I mean, every new loan brings a new challenge, and the biggest, you would think there's only a handful of scenarios that you would run into in doing these type loans, and it's amazing how many different type scenarios a customer can come at you with. Whether it be they own their land, they're being gifted land, they're wanting to buy land. Grandma's going to cut off a chunk of her land and gift to them. So just a amazing number of different type situations you run into that you got to work through. Mm-hmm. The challenge is we compete against local banks typically on construction loans. That's our big competition, and they don't have agency guidelines and hoops to jump through. And the challenge is making all that come together. Building a program that, you say up front, I can do this, but to do this, we need to do this, this, and this. And lining all that up and making sure that all the pieces are in place, making sure we've got enough money built into the transaction so that we're not shorting anybody, or we're having to go back to the buyer or the builder after the fact and say, hey, we need more money. It is the challenge. So we really take that seriously about knowing the numbers up front and being able to structure the deal so that the numbers come together in balance at the end.
Well, what's I've seen different ways to structure deals. I've seen different processes lenders have around that. How does Stockton approach, making sure you structure the deal right? How do you make sure that happens?
We spend a lot of time on, most of our training is built around structuring the deal. We offer a program to all of our loan officers, and we've got close to 200 loan officers within our company. But we really emphasize being confident and proficient in structuring and setting up a deal. And we've got some worksheets that we've built that help our loan officers to do that. And we focus a lot on making sure they know how the numbers go in, how they're input into our systems, and how they close out, so that again the numbers come together. And training is the key there. I mean, we train every week. We have a 30-minute training session that we go over a different topic every week. And it's not, we do a lot of other trainings within our company. Those trainings tend to be marketing and how to get referral business. And our trainings on this program is nuts and bolts. We talk about, how to deal with flood situations if you're in a floodplain, or if you can do it if it's in a floodplain, or we talk about gift of land equity. We talk about the differences in FHA, VA, USDA, homeowners insurance. What are the requirements for homeowners insurance for this type of product? So training is the key, I think, and we do a lot of it here at our company.
You've got 200. You mentioned you have 200 mortgage loan originators. Do all of them have access to this type of program?
We do give them all access. We do constantly encourage them to join our trainings. We do have loan officers within our company that are way more proficient than others. And we do encourage them to, if they don't want to go down this path and do our program, to pass it off to a loan officer that does, and is well versed in the program, because it's not. We like to try to make it as easy as we can, but it's not your cookie cutter refinance or purchase transaction. There's a whole lot to know and to be able to offer the program. So we've got a referral program built within our company that if you get we call them one-off transactions. If you've got a customer pre-qualified and and they can't find a home, or now all of a sudden they want to build a home, and that loan officer hasn't done our program, we encourage them to pass that loan off to a more seasoned loan officer that has experience in doing it. And we find that it just makes the program look better all the way around if you can do that.
Well, you mentioned. Go ahead. I'm sorry.
We don't dissuade any loan officer from not offering it or promoting, but we do highly encourage them to be well trained and versed in.
And some are better than others, and some have that acumen to want to, learn the product. It's less of a cookie cutter product. What did you say?
Well, I'll be quite honest. Not all of them want to do it. I mean, that coming off of record years on refinances and being able to close a loan in 2 weeks and it'd be really easy. A lot of them got used to that kind of loan, and not all loan officers are meant to do construction loans. That's just the fact of it is. But it takes more involvement. You're more tied to the project. It's rewarding, and you are doing a service. And when you talk about manufactured homes, you then are now talking about affordable housing, which is a big issue. So there's lots of reasons to do it. It's just not all loan officers are meant to do it or want to do it.
How do you thoroughly get that concept? It's not right for everybody to learn or want to engage with. Do you have any suggestions on how to identify those that this program would be a good fit for? When you think about all 200 of those loan originators, there's certain things that you look for and you go, gosh, Bob or Jen, would be great at doing this. They listen, are there certain characteristics that make people good at this that you can identify?
So there are loan officers that would want to take a really good application, focus really strongly on marketing and sales on the front end, and then want to pass that file off to, processors or underwriters and things like that. And we have really strong systems in place within our company that do well with that. But it does require a little more attention to detail to be able to really do this program and do it well. So you have to be a little more tied to the program. It's not a loan where you can take a really good loan app and then have 2 or 3 people behind you do all the work and then show up to closing. You need to be involved with the customer and with the builder from start to finish. And we look for loan officers that are detail oriented and really want to be more involved along the way and to see the project to completion. So that's a big item.
Yeah, no, that's important. You mentioned earlier, about the one-off transactions. What would be the opposite of a one-off transaction?
Well, the opposite of that would be so when we promote our program to our loan officers, we don't want to promote it as the only bucket of business that they have. We want it to be a good size bucket, but we still want our loan officers to go after the realtors and to go after the CPAs and the divorce attorneys and all your traditional, referral partners. But the opposite of a one-off would be if you've got a really strong bucket there that you're going after. So they've identified a good local builder or 2 within their market, and they're actively seeking out that business. They've identified a local, whether it be a Champion or a Clayton or a manufacturer dealer of some sort, and they're actively going after that business regularly. The one-off transactions are, they may do one once a year or once every 8 months, and those transactions are higher maintenance because the loan officer is, they had to learn the program when they did the one 8 months ago. And then now it's 8 months later, they have to relearn that program again versus the one that does 2 or 3 or 4 of those a month. They're really proficient at doing it.
That's great. And now you had mentioned, and we kind of started to talk a little bit about training, and definitely want to get to some more of the training highlights. But is that something? Is it something that you can teach or incorporate into training? I get this question a lot. Is how do you teach originators to go after that referral business from a dealership or a home builder? Is that something you guys cover? Is that something you can offer some insights into?
We talk about it. That's a really good question. It kind of starts with, we look for loan officers that maybe have some experience with that. And a lot of originators have done in-loan transactions, and that's a good place to start. If you got a loan officer that's done that's in particular government in-loan transactions, they have a good feel as to what's required to get that loan guaranteed or insured. So that's a good starting point, is to identify those loan officers that have done those transactions, and then expand from that. And then solicit those builders for a less risky upfront closing product that saves them money, keeps that builder from covering the interest expense or financing a deal until it's finished, eliminating the risk that borrower may not qualify when the home's finished. So building from those relationships that are already built, that's where we really focus on.
So if I'm going to put myself in the originator shoes, and hey, I've got an appointment to go talk to this, local home builder. You mentioned, I think there were like 3, big chunky things, and like, hey, you don't have to pay the construction interest. Don't worry about, your line of credit getting tapped or having to utilize your own cash to doing that. That's got some value to it. That's a pretty big benefit. Don't worry about the buyer having to requalify, when the home gets near completion. And you said a third one in there. I think there was a third one that you mentioned that I thought could be valuable. What am I missing here?
Not tying up their credit line, not having to pay that interest up front, and then the security to know that transaction is closed up front, and there's no requalifying for the customer.
Yeah. And I think, there's a, now that I think about it, there's a kind of like a balance sheet benefit in there as well. Like, hey, you don't have to carry this as a liability, the liability on your books, which opens up the door for you to, utilize those funds or, that capacity somewhere else. Right. Hey, it expands what you can do in a year, and overall can increase your revenue. I think that was the missing piece that I had tucked away somewhere in my memory. But no, I think all of those are really great. Is that something that you guys regularly talk about, or is it more of a conversation that you get from, a phone call here and there for people that are interested in your organization?
Well, no, it's definitely something that we promote with the program. That those are the big benefits to the builder. The benefits to the buyer are for our loans, we focus heavy on government construction firm. So our niche is low to no down payment. So the big benefit for our buyers is, instead of going to the local bank and them wanting 20% cash investment, our loans do not require that. So we've got a lot more flexibility with cash resources to the buyer. I'm
sold. 5% down, 1% down. Pretty amazing there.
It is.
When we think about, we talked about the benefits to, talking to a builder. We've talked about the benefits of this for originators, benefits for the borrowers as well. What are the benefits for Stockton Mortgage? Why even do this? It's a lot of work to go, add one of these C2P programs to your tool belt. What's the benefit, or what has the benefit been to Stockton in being able to offer these types of programs?
Yeah. So if you think about it, if we're talking about an in-loan transaction, I typically would pre-qualify the customer. I would order an appraisal. I would order title work. I would get that loan ready to close almost to in a sense. And then I would issue a commitment letter to the builder, and then they build the house. And then at some point down the road, I want to redo all that. I want to update all of those documents and basically do the process twice. So for us, it is a little more work. There is more time investment on it, but it does allow that savings of time as well, because we're only processing that file once, and then we're seeing it through to closing. As far as for another big benefit to Stockton is recruiting. I mean, that new construction is going to be hot for a while. All indications are we're short in housing nationwide, and it's going to take years and years and years for that to correct itself. So new construction products and being able to offer these products helps us to recruit. And for us, we've been doing it for, I think, 8 years now is how long we've been working on our program. I feel like we're constantly working to improve it and to make it better. But I think we're a little ahead of the game for some of our competitors that are maybe just now jumping into this. So, for recruiting, it's a great tool. We offer this. We offer construction permit, site built, systems built, and we offer renovation products. So those are all good recruiting tools that help us.
It sounds like you got the full bag of programs there to be able to offer. And I think that's like the number one thing when I ask that question is, what are the benefits? Is recruiting and retention, kind of lead the pack there, and it sounds like you guys have all the right programs in there to, kind of address this, call it a housing shortage, housing crisis. People tend to use the word crisis, abuse that word, but definitely a housing shortage. And as we look to the future, I think Fed did their announcement last week, and hey, we're not going to raise rates, we're not going to drop rates, we're going to be steady through this year. And as you personally, kind of think about what's in store the next 12, 24 months, what does that look like for these programs?
I think sky's the limit for our programs. We're really excited for the next 5 to 10 years, and we're investing heavily in improving our product and training people up and continuing to grow the program. But I think we're in it for the long haul, and I think it's going to be good for the long haul. So,
go ahead. I didn't mean to.
Yeah. Well, the thing about affordable housing, when you talk about new construction and in particular manufactured housing and affordable housing, it's not so much as the affordable part of that, although, we do these on single wide homes as well. So that opens us up to a whole nother level of affordable housing bucket. And so we are filling an important need there. But when you start talking about your double wides and your modular homes, those homes aren't necessarily always cheaper than site built houses. But the bigger issue is labor and finding skilled labor and general contractors that can do site built housing in a lot of the areas that we're doing these programs in. And systems built, that's the main niche that they fill. Is they've got these dealerships and builders out there that are used to doing one-off transactions, is a good way to put it, in rural areas. And that's the way to fill that need, because we just don't have the qualified construction contractors to build in some of these areas. So it fills a big need for the market.
Skilled labor sounds like it, and I've heard that for some time now. Not sure if it's getting better, not sure if it's getting worse, but will continue to be kind of a thorn in the side. You see that getting in the way of the future, especially as, we see construction pick up when interest rates come down. What else do you see in the future, be it positive or negative when it comes to construction financing?
Well, the good thing is that everybody's talking about the need for it, the need for new construction, the need for manufactured housing.
Mm-hmm.
I've been in this business for 30 years, and again, going back to the manufactured side of it, that's kind of a roller coaster ride. If you've been involved with manufactured housing over the last 30 years, it's been lenders come in and lenders leave, lenders come in and lenders leave. And right now, the positive is that from all the way to Washington, people are talking about the need for this type of housing. So I think a lot of good is going to come of that, because we're seeing Fannie and Freddie and Ginnie, they're all jumping on board. USDA is in a huge way right now, promoting construction to perm, and in particular, manufactured housing. So we're seeing some high-end legislators and regulators on board with the program. So I think there'll be a lot of good come out of that.
Oh, that's great. Now, when we think about your journey and Stockton's journey to get where you guys are today, and I'm sure there's people listening to this podcast that are kind of asking themselves the question, like, God, we really need to be there. We're behind the ball. We haven't done this. We need to start making steps towards that direction and offering construction or renovation programs. What kind of advice would you give to them? Or almost like, what kind of advice would you give to yourself if you could go back in time on how to be successful here and avoid certain pitfalls?
Yeah. The nature of it is you're going to make mistakes along the way. Just minimize risk wherever you can. And, Langorilla does a big part of that, in helping lenders to minimize risk. So that's always good. I don't know. We grew our program extremely slowly over those 8 years. And we intentionally slowly, I guess is a good way to put it, and with the emphasis on risk minimization. So you can't minimize your risk as much as you can.
That's great. That's great. Now, this all super, super valuable, and just can't thank you enough for being on the podcast here and sharing a lot of this information. As we get to the end of the podcast, we do this segment here, little bit of a lightning round wrap up to the podcast per se, where I just get to fire off some questions for you. And if you're ready, I would like to go ahead and just start shooting.
Shoot.
All right. Would you ever build your own home with a construction loan?
Well, absolutely. Yeah.
Oh, absolutely.
Yeah.
Great answer. Love hearing that answer.
Yeah.
All right. Now, last question here is, if you can change any bit of legislation, any law, or any guideline, I'll expand this, any guideline as well, what would it be?
So back to affordable housing and lack of inventory. I think the elimination of capital gains on real estate for landlords that maybe have owned a property for 10, 15, 20, 30 years, I think would free up a lot of inventory. For renovation, we see that all the time. You have these rental properties that have been owned, and they're, maybe the landlord's older and they're not maintaining them. And then they get to a point where you've taken all that depreciation over the years. So if you go to sell that property, it's a big hit for capital gains for those guys to release those properties. So a lot of times we see it, they won't sell a property because of the capital gains that's on there. So if they could somehow tie a capital gains tax cut to primary residence homes. I think that would free up a lot of inventory for housing.
Wow. I've never heard that one before, but I definitely think it makes sense. Get rid of the taxes always motivates people, and you never know what you're going to see. Never know. That one could come true. You never know. But David, thank you so much for being on the podcast. Really appreciate you jumping on here and sharing all that knowledge. If people want to get in touch with you, reach out, learn more about what Stockton has going on, how can they get in contact with you?
If you're interested in our program, my name's David Willoughby, dwilloughby@stockton.com.
All right, fantastic. And we'll go ahead and post that with the information when we publish the podcast. It'll be right here below. And thank you again. Can't thank you enough for being on here today. And hope you have a wonderful rest of the day, David.
You too, Sean. Thank you.
This podcast is intended for educational and informational purposes only and does not replace independent professional judgment. Land Gorilla Inc. makes no representations, warranties, or promises for and disclaims any express or implied warranties related to content. Before acting on any information, you should consider the appropriateness of the information as it pertains to your unique business needs.